Right, hello and welcome. This is Jerry Singh. I'm making this video for our new Forex group. So in this video, I will be explaining the basics of how to trade Forex, how to understand the different terminology used in Forex, how to calculate the lot sizes, what are pips, and how is your lot size going to affect your pips and how much money you make. So bear with me and I won't go in unnecessary details. I will go only in the details that are required for you to trade. So the simpler you keep it, the better it will be, so that you don't get confused. Okay, so let us start. I'm looking at any random pair. Before I jump in, all right. Now have a look. The price over here is 1.13953, right? Let me write it up here. 1.13953. Okay, now in this price, hold on. All right, this is the price over here, right? In this price, this second last digit, the digit 5, all right, this is your pip. This is your pip value. Let me color it red as well. And now the digit 3. All right, now the digit 3, this is your micro pip, or it's also called pipet, or whatever you want to call it, or it is just called a point. Let me add that as well. So when they say the market moved, say for example, if I say the market moved 3 points, so that is this 3. If I say the market moves 53 points, that means it moves 5.3 pips. If I say the market moved 953 points, that means 95.3 pips. All right. If I say the market moved 3,953 points, that means the market moved 395.3 pips. All right. So on the points, how many points there are, you divide it by 10, you'll get the pips. Alright, so this is the not so important stuff. So just to give you a very basic idea, the next thing I want to talk to you guys about, it's called spread. Now what is spread? Now spread is the commission that the broker makes whenever you trade Forex. Now I will be making this video in a very layman's language so every newbie can understand as well. For example, now you see the price is 953, right? That is 953. Now if you sell it, then the price is 948. If you buy it, the price is 975. That means now if 53 minus 48, that is like 1.5 pips. So that 1.5 pip difference is what the broker will make every time that you place a trade. For example, if I place a trade right now, for a sell, this is the price that I will be getting, 1.13948. But at this moment the price is 953, right? So whenever you start a forex trade, it will always and always start in a negative, in your negative value. When I say negative value, your money will be in negative. After the market has moved 1.5 pips in your favor, then your price and then the money that you would have made will be zero. All right. Now the price, now when the market moves any further down than 948, that is the profit that you will be making. All right. And the same goes for buy. For example, the basic idea is if you're gonna sell, they're gonna give you a lower price than what you have targeted, and if you're gonna buy, then the price is they're gonna give you a higher price. See, Now it's 75 over here, it's 53 over here, right? So there again there's a difference of about roughly 2.3 pips or something. So this is the spread, and that is how that is the money that the broker makes every time. All right, now this is a very basic definition, but honestly, if you are trading on a H4 or on a H1, uh, it doesn't really matter, because you one or 1.5 pips or 2 pips, not a big deal. However, it's always desirable to check the spread according to whatever broker you're using, and the closer these prices are to your the current market price, the better it is. And for the newbies, I suggest not to trade anything below M30. Just stick to M30 or even M15, but nothing lower than M15. Never go on an M5 or an M1. It is strictly not advisable, especially for the newbies. There the price is just everywhere, and it's not really a good practice to trade forex on an M1, because if you try to target the price over here, they're gonna give you a price which is somewhere over here, because this is the amount of spread. Now you see this is a lot of difference on an M1. As you go higher on the time frame, the difference keeps reducing. You go on an M15, it's not that bad. M30 even better. H1 even better. H4, it's almost the same price over here. All right. So again, there will be a difference, but the higher the time frame, the lower the difference matters. Because look, the market moves in a same kind of pattern on every time frame, right? We know that. So better to start it off a higher time frame. For example, if I sold my trade, if I put a sell trade right over here, and my profit target will be say on this bottom line. So you see, once the price moves, what I can do is I can just uh, move my stop losses to break even and let the trade run. Let me give you a bit of the market is closed, so I can't really give you a live example, but I've done this earlier, and I will be doing it during the sessions as well. Alright, so there are two kinds of orders that you can place in Forex. One is the instant execution, second is the pending order. When you say instant execution and I do a sell, I'm just gonna sell right where the market is moving right now. Okay, if I'm gonna do a pending order, then I have to choose. You see, buy limit or sell limit. Buy stop and sell stop are used as well, but we will mostly be using buy limit and sell limit for the way we trade. Alright, now what is buy limit? Buy limit is when the price is higher. For example, let me close this. Now, for example, you wanna buy exactly where this line is. Alright, exactly where this line is, you wanna buy. Let me write a text. Remember the way we trade forex, we always and the way we trade binary, we always say I'm trying to target this price, I'm trying to target this price. This is that kind of a target price. All right, so we are trying to buy it at this price, this red line, but at this moment the price is over here. Now you see we are on a forex, all right? So we never know. In binary we always tend to miss these opportunities, but in forex you can always catch them. You can put a pending order for this price value. All right, sorry. So if I want to buy over, so I'll go pending order and I'll go buy limit, and I'll type the price. Here my price is 1.13404. 1.13404. This will be my price, and you need to set your stop loss and your take profit. All right. For example, my stop loss, I wanna for example, what my strategy is that if the price goes lower than 1.13170, then I'll just take a loss. I don't want to risk any more money. All right. So that will be my stop loss, 1.13170. All right. And the take profit is, for example, the take profit is exactly where the current price is. So I'm just gonna do 1.13953. All right, now this is my entry point, this is my exit point, and row over here at the bottom, that will be my stop loss. So if the price goes against me, I will be the maximum loss I will be having is these 20-30 pips, and the maximum profit I will be having is these 60-70 pips or more. All right, so this is a very basic way to trade forex. Now in the same way, if we want a similar thing to go on a sell, for example the price is exactly where my cursor is and you want the price right up top here, so instead of a buy limit I will be going sell limit and I will be changing all the prices. All right, for example if I want to price up here, say it's 1.14445, so I'm going to go 1.14445, and my stop loss, now my stop loss will be on the upside, right? Because stop losses go on the side where your market, where you will be losing money, and take profits will be on the side which in the direction of your trade. So if I am selling over here, I will be using a sell limit at this price. My stop loss will be, say, 1.14655, 1.14655. All right, and my take profit, say, is exactly where my price is, so it's 1.13953, exactly where it is. So I'm selling over here where my cursor is, and I'm taking profits over here where my current price line is. Okay, so this is the most basic way to trade forex. And if we are doing live sessions, most of the times we will try and see how the situation is, and if the market is, for example, if this is a line, right, this is what we are targeting, and we're gonna higher time frame, and all right, we say, we say that I'm just gonna sell it over here. So this will be our entry point, and this blue line, let me color it blue, this blue line will be my profit line, my take profit. Let me enter my entry as green. Okay, so this is, and my stop loss goes, say, way up here. Of course we will be trying and getting better trades than this, but this is just an example. So if on a stage like this, on a setup like this, see, you are risking around 26 pips, and you are gaining around 30 pips. So it's almost like a 1-to-1 ratio. So if you want to do, if there will be setups where we will always be trying to get setups which have better rewards than this. So this is just like your any of your binary trades. In fact, it is better. Binary never gives you more than 80% returns. Over here the maximum you can lose is, say, 30 pips. So if you put one standard lot, so that is, you will be risking to lose $300, but you will be gaining to, you will be also in the line to make around sorry, you will be risking around $260 because that's 26 pips or 260 points, and you will be attempting to make these $300, that is your 30 pips. So now again, let me explain you the lot sizes. All right, now this, when you try to put a trade, you see, this is what you do a new order, and you will have a volume. All right, so this is your lot sizes. So 0.01 lot will, on again it depends on the leverage. If you are starting out, I recommend, I don't want to confuse you guys with the leverage around too much, but just a basic idea is, I suggest you guys use 1 to 400. um, Anything below than this, this is kind of how much, how can you gain access to more volume, more trade shares, or in fact they are called trade shares as well. How can you gain more access to trade shares on, based on, even if you have a lower amount of money? So let's not confuse this leverage too much. It's kind of a big topic, but on a, if you guys are starting out, I suggest you use this leverage, because even on a very small lot size, say say 0.01, it the movement of price, it approximately gives you 1 cent per 1 point. So if the price moves 1 pip, you will be making 10 cents. So that is something that the price will be moving. But if you go anything too lower than this, then there's the possibility that your price will be maybe moving a lot, uh, but you won't really be making any much significant amount of money. So this is a good place to start. Even 1 raised to 300 is good, and 1 raised to 400 is what I use, and it is pretty good. And you guys, as you guys know, I'm very conservative as a trader. So if this is a very good leverage for me, I think you guys are much more aggressive than me, and should serve fairly well to you as well. So we have covered anything else? Okay, we have covered pips, we have covered lots, we have covered trade sizes. Just for a basic idea, if you guys wanna go in depth for this, I suggest you go to Baby Pips. It has a very detailed way of explaining all this leverage and stuff. For example, as I said, when I said that I will be using a standard lot, see, one standard lot has 10,000 units, 100,000 units. All right. Now, when I say mini, that means every standard lot will have 10,000 units. Now, most of the brokers are leveraged according to standard lots. However, the FXCM account I use, that is a mini account. So when I say one lot in a mini account, it gives me 10,000 units. Okay. So again, you don't need to confuse this very much. And when I say, for example, when I say zero point 0.1 lot, so in my case, it is zero point 0.1 of this 10,000. So that is like 10 units, only these two digits. I wish I could explain this in a better way, but uh, let's not confuse this too much. The only thing you guys need to know is this is like your trade size you're putting. So for starting out, I suggest not to go any higher than 0.01 or 0.02. And the starting deposit is, I recommend you guys put at least I only when I started out on this, I just put $200, and even lower than that. But I suggest you guys to put at least $500 if you can. If not, then anything above 200 will be a good will be a fair enough deposit size. Okay, so however, in your spare time, I suggest you guys read. You guys read Okay, you guys read from this. What is a pip? You see the way all the US currency pairs are valued in a different way than the Japanese pairs. For example, you see all the US pairs will have 5 digits, one, two, three, four, 5 digits at the back. However, all the Japanese pairs will just have three at the back. So in this case, the pips are completely different, but honestly, it still doesn't really matter if you guys have a good idea of how your lots are affecting your money according to the pips. You'll get a good idea of how all this works out. So I suggest you guys to read all this stuff. Read what is pips. You just need to go to preschool, then you go to how do you trade forex, then you go what is a pip, what is a lot. And I also suggest you guys to have a bit of knowledge about this base currency, code currency. It's not much. So for example, now when I say euro USD, the base currency is my base currency is USD, and euro is my code currency. So that is the value of the value of this price is of euro according to the USD, if that makes sense. However, as I said, you don't need to go into much depth of all this, but however, reading it at one go will be a good idea. So at least, if not anything else, at least study these three bits. What is a pip? What is a lot? And what are forex orders? Forex orders, I have explained you what is a pip. I've explained you what is a lot. And now these are the forex orders that I explained. Like I explained you guys buy limit, and I explained you guys what is stop loss and Trailing stops, I don't really use trailing stops. Your brokers won't allow these kind of stops. So in the end, all you guys need to know is what is a market order, what is a limit entry order, and what is a stop loss order. So these three things are the important bits that you guys need to know. However, I will be doing a live FNQ for the FAQ for the very first session in Forex, and we will be clearing out our doubts over there. So till then, good luck, happy trading, and I'll see you guys in our first Forex session soon. Bye for now.